Hey everyone, Lucid is scheduled to report first quarter 2024 earnings on May 6th after the markets closed, and investors are asking if they should buy Lucid stock ahead of that earnings release. So I'll answer that question here. I'll also take a look at what to expect when Lucid reports earnings and what I'm looking for from Lucid as an investor, or not as a shareholder, but just as an investor from that perspective, what I'm looking for from Lucid to report.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So we got a rough idea about what to expect from Lucid when the company announced its first quarter production and delivery numbers on April 9th. They did that before it announced its quarterly earnings number. So they said that they produced 1,728 vehicles and delivered 1,967 vehicles during this period. Now, I highlighted when I reported on this news that it was behind schedule, and I'll show you what I mean by that. So, in its previous quarterly earnings update, Rivian told investors that they have a 2024 production guidance of approximately 9,000 vehicles for the year. So if you look at the production guidance of 9,000 vehicles for the year, that means they need to produce roughly 2,200 units, 2,250 units every quarter. And so far for the first quarter, they only produced 1,728 units. So they're behind schedule on that front. So if that trend continues, I would not be surprised to see Lucid lower its production target for the year when it gives investors its quarterly earnings update on that date that we mentioned at the beginning of the video. So that's one thing I'm looking for from Lucid. Is it planning to maintain its production target? Is it going to lower that production target? That's something I'm really interested in seeing from Lucid, especially given all of the data we've gotten so far in 2024 regarding electric vehicles. All of the data that's come in has been very bad. Demand from consumers has been lower than expected. Supply has been much more than expected. And so the industry is still in imbalance where there's too much supply, not enough consumer demand, especially in the higher price segment where Lucid operates. Now, we've already got data coming in from several car companies, including Tesla, GM, and Ford, and they've all demonstrated decreasing EV sales. Thankfully, all three of those companies that mentioned already had other business segments that offset the declines in EV sales. Tesla was able to sell investors on their AI future and robo-taxi and the lower priced model, and the stock price bounced higher, and investors overlooked the fact that their production and delivery numbers were down considerably year over year, and they added tens of thousands of units to their inventory balance, which is even harder to sell. Similar story with Ford and GM. Their EV sales struggled, but their other segments were so profitable that they offset the struggles in the EV segment. All three of the companies I highlighted earlier have all said they're decreasing their increase in supply. So they were all planning to increase supply because at the current scale, nearly every EV company is losing money except Tesla, or companies with EV segments are losing money except for Tesla. I'm going to show you just how much money Lucid is losing, and they all need to be at larger scale in order to break even or generate profit. So it's just in a very bad dynamic right now. All of these companies are in a position where they need to increase supply in order to become profitable, but at the same time, the industry is already oversupplied compared to where customer demand is. That's why I've been suggesting investors avoid this industry for so long now, because of these industry dynamics are not favorable for any of the companies in the industry. Let me show you Lucids losses on the bottom line. So in the latest quarter, which ended December 31st, Lucid lost $736 million from operations. That was barely an improvement of from the $749 million it lost from operations in the same quarter the prior year, despite the fact that revenue fell from $257 million in the same quarter last year down to $157 million in the same quarter this year. So this is not a growth company right now. It's not growing, it's actually declining. And then for the year, in the 12 months ended December 31st, revenue fell from 608 million to 595 million. And then the loss from operations increased from a whopping 2.6 billion to an even larger $3.1 billion of losses on the bottom line. So at their current scale, they're on pace to lose about $3 billion annually. And I highlighted already their production target for 2024 is roughly similar to where they were in 2023. So without improvement in revenue, it's likely this company will lose roughly $3 billion on the bottom line in 2024. Now, the hopes and what I'll be looking for from Lucid's current earnings results when management comes online to discuss their progress in the quarter is about the SUV. Remember, they're launching their Gravity SUV. Plans were they were going to launch this model later this year. I'm hoping, and for investors' sake, I'm hoping that they're on schedule to launch that model by late this year and get these out for delivery late this year so that in 2025 they can really ramp up production of that SUV and help generate more revenue so that they can offset some of these losses on the bottom line, because these losses are massive. $3 billion in losses for a company that's generating roughly 600 million in revenue. This is not sustainable. I understand Lucid has enthusiastic investors that are willing to give the company money and invest in the company, but that is not unlimited. They can't continue giving money to Lucid to burn. Eventually, those investments will decrease, or they will force Lucid to show some progress before they give Lucid more money. For now, they have enough money because of those generous investors, but investors don't like to put money in continuously with little hope for profitability. So Lucid needs to demonstrate some hope, some pathway to profitability. Otherwise, I don't know how much longer this company can go at this rate. Something needs to change because investors are becoming impatient with electric vehicle companies because of those industry dynamics I highlighted earlier. There's just too much supply for the demand in the market. There needs to be a shakeout. Some of these companies need to go away. And unfortunately, some of these investors will lose a lot of money on these EV companies if you haven't already lost a lot of money, because many of these EV company stocks are down considerably, Lucid included. So right now, Lucid is trading at a forward price to sales of 2.4. And coming into the quarter, I did not have Lucid stock rated as a buy. I last updated it on April 9th, saying investors should not buy it. It's going to perform along the lines of the market. If the market rises, then Lucid stock might rise. If the market falls, then Lucid stock will likely fall more than the market is falling. So going into the quarter, I'm keeping it rated here. I'm suggesting investors do not buy this stock. It's in too much trouble. I want to see more progress before I can recommend buying Lucid stock. So I'm keeping it rated as a hold or not a buy. And of course, I will update you when the company releases earnings and I get to digest that new information. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.